What is going on, y'all? This is Pay Me in Dividends, and today is September 7th, 2025. Welcome back to the channel. If you're new to the channel, I talk about income generating assets through the stock market. All right, so we're going to start off with my portfolio at the moment, which is extremely simple. It's a 2 ETF portfolio. This is my main income portfolio, and you'll notice the majority of it is in SPMO, which does not pay much of a dividend. I believe it's about 0.5% annualized on an annual basis, and there's a reason for that. I explained it in my previous video. It is a momentum ETF based off of the S&P 500. I gave a little more context around it in my previous video if you want to check it out. But SPMO is the largest position in my income portfolio, followed by BTCI from NEOS. Alright, and in this video I want to tell you guys about my plan for the month of September, because we know that historically, according to this article here, and you can find many other articles as well online, but this one in particular from Fidelity actually says, since 1927, September is the only month of the year with an average decline. All right, February and May are flat, and the other months are positive. All right, so since 1927, September is the only month of the year with an average decline. So what does that tell us? That tells us that there's opportunity in the market. All right, so we're going to go over here to the SPY ETF, which tracks the S&P 500. And we can see over the past 5 days, right, since the beginning of the month, pretty much, the S&P is flat. It's actually down around 0.03%. All right, so that shows that we are now entering September. We're now entering this winter month, so to speak. And if history repeats itself, September should be a down month. Now, personally, I'm excited for this. Why am I excited? Because it's all about positioning yourself, right? Because we are long-term investors. All right, so again, I'm in SPMO. I already hold 421 shares of SPMO, and my game plan for September is to buy some more shares, or at the very least just remain positioned in SPMO and allow it to do its thing, right, until it wakes up from that slump. But again, SPMO is an S&P 500 momentum fund, and basically what they do is they extract the around 100 companies out of the S&P 500, the top performers based off of their momentum calculations, right, and they rebalance it every 6 months based off of their calculations. And so they're really picking the winners of the winners, right? So they're not invested into all 500 companies in the S&P 500. They're finding the 100 best companies performance-wise in the S&P 500 and prioritizing those companies in order to perform. And if we look at SPMO, we can see year to date it's up 22%. All right, the S&P is up 10% year to date. All right, and so SPMO is outperforming the traditional S&P. If we look at a 5-year chart, SPMO is up 143%, whereas SPY is up 93%. All right, so that right there tells you, the performance and how prioritizing 100 companies out of the entire S&P 500 can really pay off for an ETF, and this is why I've made it the majority of my portfolio. All right, now the second thing I'm looking at is reintroducing QQQI into the portfolio. If you follow my channel in the past, You know that QQQI was a main staple in my income portfolio. I ended up letting it go in order to prioritize growth with SPMO, but I'm thinking about reintroducing it back into the portfolio while, September is a red month, in order to build that position again. But I'm going to do it slowly this time, all right? I'm going to buy 5-10 shares at a time. I don't think QQQI will become a major weight in my portfolio. Maybe one day it will be, if it continues to do what it's done historically, which I've been very impressed with. But I really like QQQI. I like QQQI because of its share price appreciation compared to its competitors. The consistent dividend payout, right? It pays around a 14% yield. And if we look at the distributions, we can see there's not much of a variance here, right? 62 cents, 61, 58, 53, 63, 62. So it's a very consistent dividend payout, and it has a very tax-friendly structure. Now, I'm not a tax expert, but based off the research I've done, and you can hear many other people on YouTube talk about it, these NEOS ETFs are extremely tax-friendly if you have these investments in your taxable account because of the way they structure the ETF and the options contracts. All right, so those are just a couple reasons why I really like QQQI, and at some point I will reintroduce it back into the portfolio, and it may even be this month, while the prices are a bit suppressed. All right, so the third thing I'm doing is holding on to my BTCI position, which I currently have around 610 shares. And same thing with QQQI, all right? It's tax-friendly, very consistent dividend payout. BTCI is one of the better Bitcoin, income ETFs in my opinion, because they actually hold a portion of the underlying in a spot ETF, which is HODL, right? A spot ETF is pretty much an ETF that holds Bitcoin as the asset, and so it mirrors the price movement of Bitcoin itself. And so what BTCI does is it holds around a fourth of its portfolio, around 25% of its portfolio in HODL, and then they generate that income with Bitcoin futures. All right, Bitcoin future options, which you can see down here. You can see all the future contracts here, right? CBTX. This is all Bitcoin futures. All right, but around 25% of the portfolio is in a spot ETF, and so they're still capturing that upside of Bitcoin. Now you are going to get a capped upside. You're not going to, ride the entire wave, but you still have that exposure, and so you're not missing out. And in the meantime, you're receiving a monthly dividend payment at a 28% annualized yield. All right, so very simple, very, very simple portfolio. Nothing too crazy. All right, I have my S&P exposure, I have my Bitcoin exposure. I'm getting income from Bitcoin futures while still having exposure to that underlying spot ETF. I'm getting my souped up S&P 500 momentum exposure, and so I'm keeping it extremely simple. Again, I may add QQQI back to the portfolio this month. I'm definitely going to add it back to the portfolio at some point. I'm still debating on whether or not I'm going to do it this month. But again, extremely simple. I'm keeping things simple. All right. I don't want a portfolio of, 20, 30, 40 different stocks. I want to keep it simple at all times. No more than 5 to 10 ETFs at a time. and even 10 is pushing it for me. All right, so I want to keep it simple. I want to be extremely intentional about what I'm doing, which is growing the value of my portfolio while also generating income. I do not want to suppress my principal just to increase the income, but sacrifice the increase in value of my portfolio. So I'm trying to kind of keep balanced here, as you notice, with the S&P, with the Bitcoin. And so it's a long-term game. It's a long-term game. Take it one day at a time. Do your research, but don't think about it too much. I think the more things change, the more they stay the same. And basically what I mean by that is things kind of come full circle, and you realize that putting your money into the S&P is probably the best play over the next 10, 20, 30, 40 years, regardless of your time horizon. And so I'm trying to keep it simple, all right? I'm trying to keep majority of my portfolio in the S&P 500. And that's really it. Just keep a long-term mindset. I have no need to be rich tomorrow or next week or next month or even next year. I have a 5, 10, 20-year plan, and it's all about being in good assets that have, historical backing, and that we know will be around for many, many years to come. All right, so quality over quantity. Keep it simple. Put your money into assets that appreciate in value. Put your money into assets that generate income. Eventually, that income will replace your 9-to-5 income, but don't rush it, right? Don't take any shortcuts. Put your money into assets that will actually be around for years to come. All right, so that's my spiel. That's my speech for the day. Let me know in the comments if you guys like this type of commentary. I like it because it's almost like I'm, kind of reminding myself. Sometimes I get out of line and kind of fall out of the fundamentals of what investing actually is, and I have to remind myself to keep things simple, back to the basics. And so you guys let me know, what is your plan for September? What stocks are you in? What ETFs are you in? Are you positioned the way you want to be positioned? Are there any changes you're going to make? Are you just going to double down on what you already have established? You guys let me know in the comments, all right? So, as always, I appreciate you stopping by, and I will catch you in the next video.